Hello everyone! In this video, I'll show you how to fill out IRS Form 1040. Let's dive into IRS Form 1040 for the 2023 tax year. It might seem intimidating at first glance, but with the right guidance, it doesn't have to be. Today, I'll walk you through the form step by step so you can tackle your taxes with confidence. First, Form 1040 is your U.S. individual income tax return. It's the main form used to file federal income taxes. Whether you're using tax software or filling it out manually, understanding this form is crucial to managing your taxes effectively. Let's start with a bird's eye view of the form. It begins with your personal information: name, address, social security number, filing status, and dependents. While this might seem basic, it's critical for ensuring the rest of your tax return is accurate. Next, we move on to calculating your taxable income. This involves adding up all your income for the year, including wages, salaries, bonuses, and any other sources. Accuracy here is key, as it sets the foundation for the rest of the process. On page 2, you'll calculate your tax liability, the amount of tax you owe. Here, you can subtract any tax credits you qualify for and include taxes you've already paid through withholding. Think of it as balancing what you've earned and what you owe. Finally, you'll determine whether you're due a refund or owe additional taxes. The form helps you figure out if your withholdings and credits have fully covered your tax bill. Let's walk through a real-life example. Imagine John, a single filer, completing his Form 1040 for 2023. He starts by entering his personal information: name, social security number, and address. He checks the box for single as his filing status. For the presidential election campaign, there's an option to check a box to contribute. John opts not to contribute, as this does not affect his tax or refund. For those involved in digital assets or virtual currency, there's a section for this year. John hasn't dealt with these, so he selects No. Next, we move to dependents and deductions. Dependents can significantly influence your taxable income, as they might qualify you for exemptions and credits. Dependents typically fall into two categories: qualifying children or qualifying relatives. The IRS sets specific criteria for each, such as age, residency, relationship, and financial support. John doesn't have any dependents and isn't claimed as one, so he checks the appropriate box for his situation. Let's move to reporting income. Income reporting can get interesting. John has a W-2 from his employer showing he earned $16,150 this year. If you have multiple jobs or freelance income, you'll need to report all your earnings, including any W-2 or 1099 forms, and account for estimated tax payments. John also had household employee wages, which he includes. Since he had no other earned income, he enters 0 for those fields and adds up his total income. For interest income, there are two types: tax-exempt and taxable. For example, municipal bonds usually yield tax-exempt interest, while interest from savings accounts or CDs is taxable. John reports $110 in taxable interest this year, a higher amount than last year due to rising interest rates. Next comes capital gains or losses. These occur when selling assets like stocks or real estate. A gain is profit from a sale above the asset's cost, while a loss is the opposite. John didn't have any to report, but if you do, they'll need to be listed separately. After calculating his total income, John subtracts any adjustments to determine his adjusted gross income, AGI. He doesn't have any adjustments, so his total income equals his AGI. Now, let's talk about standard deduction versus itemized deductions. This is a significant decision. The standard deduction is a fixed amount, while itemized deductions are based on actual expenses like mortgage interest or medical costs. Taxpayers choose whichever results in a lower taxable income. John opts for the standard deduction, entering the amount listed for single filers. He has no qualified business income deductions, so he skips that section. After subtracting his deduction, John calculates his taxable income as $3,210. Using the tax table provided in the 1040 instructions, John looks up his tax based on his taxable income. For single filers, an income of $3,210 corresponds to a tax of $323. Let's move to page 2, Credits and Other Taxes. Tax credits can significantly reduce your liability, so it's important to check your eligibility. Common credits include the child tax credit. John doesn't qualify for any credits, so he enters his tax amount of $323 on the appropriate lines. Next comes federal income tax withheld. This is the tax already deducted from your paychecks. John refers to his W-2 for this information. If you've changed jobs during the year, add up the withholdings from all W-2s. John's total withholding covers his tax liability, so he expects a refund. The final section determines if you're owed a refund or need to pay additional taxes. If your payments exceed your liability, you'll receive a refund. Otherwise, you'll owe the IRS. Since John's withholding exceeds his tax liability, he overpaid and is due a refund. He opts to receive the full refund via direct deposit, providing his bank details for faster processing. Before submitting, double-check all information, claim applicable deductions and credits, and ensure sections that don't apply to you are left blank. Once verified, sign and date the form before submitting it to the IRS before the deadline. And that's it. Remember, tax situations can vary widely depending on individual circumstances. While this guide provides a solid starting point for straightforward cases like John's, more complex situations, such as owning multiple properties, running a business, or dealing with investments, may require additional tools or professional assistance. Tax software can help simplify the process, offering tailored guidance based on your unique inputs. Alternatively, consulting with a tax professional ensures you receive personalized advice and maximize potential deductions while staying compliant with regulations. Thank you for watching, and we hope this guide has been helpful.